Hi friends, welcome back to Chart of the Week series. In this series, I pick my favorite Elliott wave setup from one of the setups detected by TrueWave Scanner. If you haven't signed up for TrueWave Scanner, you can sign up now for a 30 days free trial. Let's get started. So this week's pick is BLDR, Builders FirstSource. And this is the setup that was detected by TrueWave Scanner, and I could see that this is a significant low. From there the chart has made 1 2 3 4 5 clean 5 wave rise, and then it has done a sharp down move which looks like A to me, and then this is looking like 1 2 3 basically wave B. So 3 wave rise, this is A, B, and then C down is likely to occur. If I open this chart in TradingView, so here is the TradingView chart. Before we get into the Elliott wave counts, let's take a look at the bigger picture, which is this weekly time frame. And in the weekly time frame, I can see that a swing low was made in October 23 at this point of time, and price came back recently in June here, and it took support exactly at this swing low. It never closed below it, and from there this up move started. In the weekly you can see this is clean 1 2 3 4 5, right? Let's go to daily chart now, and this is where we can see the same counts that were detected by TrueWave Scanner. This is 1 2, this is 3, within 3 we can see 1 2 3 4 5. So these are the subdivisions. Then this was wave 4, and then this is wave 5, and this is the sharp move that I was talking about. This looks like A to me, and then this 3 wave rise is possibly B, and then wave C on the downside should unfold soon, right? So now that is the setup. So this is a wave C setup, and what we can do is we can try to determine how large this C could be. So there are two ways in which we can do it, and then we will combine both the estimates to determine what is more probable, right? So first, let's see the overall retracement of this 5 wave rise. So for that, let's select the Fibonacci retracement and see what are the retracement levels for this whole rise. And as you can see, within this move, wave A, it has done more than 50%, and then it did a deep retracement in wave B again, and 61.8% level is at 116.29. Given that wave A is large, it's possible wave C also could be large enough, if not larger than this. So this gives us 61.8% at 116.29. Let's now try to use the principle of equality, wave equality, and see what the projection for wave C look like if it's going to be equal to wave A. So for that, let's apply again the Fibonacci estimation tool, and if I take this size with this retracement, then I get the equality at 114.29. So this is the equality level, and this is 61.8%. So I would say if we combine these two levels, this is what looks like a potential zone for wave C to finish, because that will ensure that this has done 61.8% and wave C equality is also done. So it doesn't have to be the complete from here to here. It could be anything in between, and if we still have to kind of take a more conservative target, then we could even take 61.8% of this. So in case wave C is going to be truncated, so that gives a target of 122, right? So but for all this to happen, the high of wave B should not be broken. So this high is at 134 134.56. So for this view to play out, 134.56 should not be breached. So this is our stop level or our risk level, and as long as this is holding, we can expect it to move down, and the conservative target could be 61.8%, which is at 122, and the second target could be this level, which is 116.29, and anything in between could be basically the second target, this zone, right? So this is how this setup could be played out. Please note that we do not provide any recommendation. The whole purpose of this video is to educate and provide information on how Elliott waves can be used to identify good trading setups and also potential targets and stop levels. So that's all for this update. We'll see you in the next week's update. Till then, take care. Goodbye.